Well, boys, in today's video, I'm going over my entry model. A lot of people have been asking me for this. The first thing that I want to highlight is that entry model is not important. And what is more important is how do you view the charts, right? How do you view who's in control and when, buyers or sellers are in control, right? So first thing that I want to kind of do is start with the higher time frame view, right? Because always going into a new week, my plan is wait for Monday, right? So today is Saturday, April 4th. I'm waiting for Monday candle to close in order to take a trade, right? So I'm not able to trade until Monday night at 8 p.m. But once we get that Monday night close, the first thing that we're going to look for is the Monday range play, right? So all we're going to do is wait for the daily Monday candle to get put in, putting in a low, putting in a high, and then from there we can kind of use our time and our chart-based price levels, right, to figure out where we want to go. Right, for example, if the Monday candle is closing here, right, and it's a bullish candle, well, then we can kind of expect us to sweep the high and then take the short off of it. Now, if it ends up being a bearish candle, right, and we are closing closer to the low than the high, well, then we can kind of wait to see a sweep and rejection off of it targeting the high, right? But that's kind of how I wait for an entry, right, when it's coming out of a weekend fractal, because I'm not trying to get caught in this sideways weekend chop, right? Because if we look at like the 90-minute, this is weekend price action so far, right here. We have gone absolutely nowhere. We've barely broken structure. There's no gaps. There's no displacement. There's no clear smart money in the markets, right? So this is a good way to just kind of avoid getting chopped up, avoid taking stupid losses. But let's go to the lower time frame and kind of look at where I am taking trades from, right? And for example, what we can do is we can come to this Tuesday play, but first off, we'll go to Monday and kind of overview what happened, right? Well, Monday of last week, and this is Sunday at 6:30, so technically not Monday yet, but 8 p.m. here, right? We get the Sunday sweeping below, and going into Monday, we get the higher low, right? From here, obviously we have this wick below, but we have a low, then we have a higher low, even with this wick down here, right? From there, we get the extreme push up into our imbalance or into our gap above. And then all we want to see is that Monday range, low or high, get swept and then fail. So boom, right there we can see the fact that we swept that Monday range high of here and then we failed to close outside of it. So you can either enter on the 23-minute or you can use the 1 and the 5, which I like to use, right? So on the 5-minute time frame, what do we identify? Monday range high got swept, right? And then we also made a fair value gap as we were pushing up to that level, right? Then what happens later on? We get the inversion of that 5-minute gap here. It took us a while, took a few hours actually to get through there. But once we did finally get through and give the clear breakout with the candle close below this level, right, which we can identify on these two bearish candles right here, the close below, right, not 1, 2, 3, 4, not these wicks that failed to break, but the actual clean structure break below. And then all I'm looking at is the pullback for that, and then that's my entry model. And again, whether you're entering with market structure and you're just using a high and then we have a lower high and that's all you need to see, or the fact that we got the bearish gap down. Some people would have entered right off of the pullback into this bearish gap. They didn't even need the 5-minute to get inverse, right? But for me, my entry model is pairing time and price. Time here obviously being this Monday range candle, and price, for example, being the fact that we inverse this 5-minute. And then from there, you can literally enter on any pullback in this zone. And as long as you have your stop loss or your risk set outside of this level, outside of that gap, well, then you can basically target at least equilibrium of that Monday range, right? And 90% of the time, right, equilibrium of that range from low to high, right, which is right around this level right here. That's going to be your equilibrium, or the 50%, right, or discount. And then obviously, as you can see, I'll put this in a higher speed, but we ended up sweeping to that. And that's the same trade that I take literally every week. So last video, I gave you guys kind of a breakdown of how I trade the Monday range. This video, I kind of just wanted to highlight the fact that entry model isn't necessarily as important as just understanding higher time frame context, right? And then I can go back on the chart, and I like to kind of make these videos a bit more raw rather than super structured. This is what a fair value gap is. This is what a change of character, right? The pattern trading works. Using levels on a chart works, but if you don't really have the when, then you're kind of going to get caught up. So from there, how I'm going to kind of plan going into this week is what? Well, we still have this daily gap above, and then below we have this daily gap right here, right? And these are the two levels that we're kind of just playing ping pong between, right? And we have low resistance liquidity here, right? And then we also have low resistance liquidity here. Sorry, so going into Monday, how I'm gonna kind of plan this out is if we take this high here, right, from Wednesday, previous week high, if we take this high, right, and we end up closing up here, but we fail this level, well then Tuesday I can wait for the sweep of the Monday high, fail, and then take the short all the way back down to this unfilled gap, right? Regardless of where that daily candle is opening, this is kind of where I'm going to target, right? And then also, if instead of us giving the Monday candle, right, breaking out to the upside, right, and the Monday candle sells off, well then we can see, are we sweeping these levels and holding this daily gap? And if so, well then with Tuesday, Wednesday, right, we can wait for the sweep, the fail, and the swing off of it. And again, entry model here doesn't necessarily matter. Whether you're using market structure or, smart money concepts using fair value gaps and inverse fair value gaps, doesn't matter. But identify where you want price to move to. Identify that we have the Monday candle coming in soon, and there's really only two ways we can go, either up or down, but we're going to tell us where we're going first. So be patient, plan this out, come to the chart yourself. It's the weekend. Use your time to get ahead, right? Draw it out for yourself. And then when Monday candle closes at 8 p.m. on Monday, boom, we can go into Tuesday with a plan, right? We kind of have an understanding of where the market's going to go. It's either going to go up, it's going to go down, but it's going to tell us where it wants to go first. So be patient, manage your risk, join the free Discord if you're not already in there. First link in my bio. And that's that. I'll see you guys in tomorrow's video. Peace out.